Hi everybody, Brian Shannon here from alphatrends.net. Today's Friday, the 30th of May, 2014. Let's take a look at these markets. What we're going to do today is take a look at the markets and then some trading ideas that might be setting up for next week. And then I want to talk about the 50-day moving average and the direction of the 50-day moving average. So let's go ahead and get started here. We had a strong week for equities. The S&P was up 1.23%, NASDAQ 1.5%, and this is a very strong month, obviously, for equities as well. 4.5% for the NASDAQ. So, and the semiconductors were up 3.7. The Russell 2000 continues to lag a little bit, but we did see some progress being made there, and gold was the worst hit. So let's take a look at the charts and see what may be ahead for the coming week. The S&P 500, as we know, broke out to all-time highs, and 2 weeks ago I was a little bit concerned that this had the potential of from this failed breakout would come a fast move lower. Instead, the market turned back higher after testing that 50-day moving average and the support at 186.50, and here we are again at all-time highs for the S&P 500. So there's a lot of people making arguments that for whatever reason that the market is topping out, or it's topped out, or it can't go any higher, but price continues to ignore that, and price is the only thing that matters. Forget about volume, forget about selling in May and summer doldrums. The trend of the market is higher. We are getting a little bit extended here in the S&P 500, and our biggest level of potential support on a pullback would be down near 190 to 190.5. Now next week I think that we want to stay focused on whether this market can stay above the rising 5-day moving average. As we are above a rising 5-day moving average, we consider the market innocent till proven guilty, and therefore any short sales should be considered very high risk and only engaged for very short-term intraday trades. That is, trading in the direction of the 5-day moving average. You can look at it and say it's overextended and it's due for a pullback, but you could have said that 2 days ago, 3 days ago, etc. The volume weighted average price for the week, that was the average price that the S&P 500 traded at, was 191.51, and that kind of further adds to the significance of this level as potential support next week. Let's take a look now at the NASDAQ, which did close at a new high here for since the for the last decade plus, and this market continues to show strength as well. So it's tough to be bearish while the market's making new highs. We did see that we had taken out some prior resistance in the NASDAQ, and now you've got to look at it and say, okay, where has the market come from? Well, in the last 2 weeks, we've seen it go from 86.5 to 91.5, basically, about a 7 or 8% rally. And where does it have the potential to go before it's likely to encounter a source of supply? We're basically right there. So it doesn't mean that you sell short here. Instead, you continue to monitor where we are in direction in relation to, and what's the direction of the 5-day moving average for the intermediate term. We're still above that rising 5-day moving average, so we give the intermediate term benefit of the doubt to the buyers. Now you can look at trend lines as well, and you can see it kind of lines up with that 5-day moving average. But I think next week our key level is going to be really about 90.25 to 90.5. If we get below there and hold below there and the 5-day moving average flattens out, then perhaps we pull back a little bit down towards maybe 89.5 to 90. But right now, again, we're innocent till proven guilty. The Russell 2000 is a little bit more interesting here. You can see that it's been battling the declining 50-day moving average this week, and it's been doing so at a level where we saw prior resistance. So this prior resistance is trying to hold a support in here. More interestingly is the volume weighted average price year to date. You can see that right now that volume weighted average price is at about 113.70, and it's acting as resistance as it had back in April. So we're still a little bit indecisive, and the Russell 2000 is underperforming. On the intermediate term, however, we are right at that 5-day moving average, and I think that next week, back below 112, then we would need to be concerned that perhaps we see this market turn back lower. My hunch, which doesn't mean anything, is that we'll continue higher, but that's certainly not something I would suggest trading off of. You trade off price action only, not off news headlines, certainly not off my hunches. You want to anticipate all potential scenarios and wait for price confirmation of that potential scenario before you actually put your money at risk. And then after you put your money at risk, the job number one is always risk management, so that if it pans out the way you expect it to, That is the way, excuse me, if the setup unfolds the way you expect it to, you take the trade, but you don't just blindly hold. You set your stops at a reasonable level so that if you get stopped out, you take a small loss rather than hang on for a much larger loss. Semiconductors, as we saw, had a big week, and this group broke not only this downtrend line, but this little area that had been resistance and this level as well. So this prior resistance, we'll look for this to become our first area of support next week, near about $45.75 to about $46. We're still above a rising 5-day moving average, so we're innocent till proven guilty, and it doesn't make sense to sell short in here. Again, we're getting extended, so it increases the risks of a pullback, but there's no edge in actually trading the short side until we have price confirmation that we have a flat to declining 5-day moving average, and we see a prior level of support broken and holds as resistance. Financials also had a strong week, and they're still kind of battling in a little bit unconvincing fashion this prior band of resistance at 2210 to 2220. We did close nicely above there, so that's good to see, but it's not quite as strong a move, obviously, as some of these other markets have seen. But we have to give the benefit of the doubt to the buyers as long as we remain above that rising 5-day moving average, and I think the key next week is going to be 2210 to 2215. If we can hold above that level, then we digest these gains a little bit and it sets us up for further upside. Gold had a terrible week, and as you know, my theory on gold is if they don't scare you out, they will typically wear you out. There's been a great bounce in gold this year. We were up very significantly earlier in the year. We're down to just a 3.7%. So the S&P 500 is outperforming gold after a big move. But there's plenty of trade opportunities, obviously. But with the declining 200-day moving average, the longer-term trend, and all these moving averages crossing back and forth, as I've been saying, if they don't scare you out, they will typically wear you out. The best case potential scenario for gold is maybe it finds some support, creates a higher low, and then creates an inverted head and shoulders pattern. But that's going to take time to develop. There's a lot better things to trade right now than gold, and we've got the potential for resistance at this prior support at 123 to 123.5. With a declining 50-day moving average, I say you just stay away from gold altogether. Shares of Apple had a real nice week. Next week they do split their shares, so as I had mentioned earlier in the week, at least to subscribers, I think that we had a chance that it could continue to run ahead of that stock split, and now we've got, I saw an analyst upgrade maybe to $720 a share. I forgot who did that today, but the fact is we've had a real strong run in Apple here over the last 3 weeks, from about 580 to 640-ish, and now we've got news coming next week. So is this buy the rumor, sell the news, or buy the news and sell the event? Actually, we've got still though a rising 5-day moving average, and I would just say that if you're an Apple and you're looking to trade, then you have an idea of where your stop goes. Twitter this week had an interesting week. It got a lot of people excited because it traded big volume. It's still clearly in a primary downtrend. We've got a declining 50-day moving average. It's going to take a while for the buyers to regain control of this stock for a while. This is part of a bottoming process that can take quite a while to occur. What's interesting about this week, however, is that we saw a big rally here from a gap, and if we take a look at the Fibonacci, that is from the low to the high, we came down today and tested the 61.8% retracement level, which was also a prior little area of resistance, and it's where we have the rising 5-day moving average. So if you're bullish on Twitter, and the chart doesn't suggest you should be other than for maybe a short to intermediate term trade, then perhaps next week this one can bounce further, and a stop down under about $32 a share would make sense in that case. Microsoft is starting to maybe show signs that it's ready to break out. We got long this one today as it broke a little bit of resistance, and on the weekly time frame we've been talking about the stair step higher, that it's the higher highs and higher lows, and on the monthly time frame it's clearly got some room to run here. So Microsoft, I think, is a good investment idea. Right now it's a good trade as well. There'll be volatility, but it looks like it could be heading for $45 a share maybe over the next several months, and right now I'm suggesting that people have their worst case stop down under $39.80, maybe maybe even at about $40.20 in there. With these new highs, of course, the biggest piece of garbage that trades, the VXX, continues to hit new lows on an almost daily basis. And this thing is just toxic. It's poison. We've talked about this ad nauseum about how it is a flawed product and it will continue to go lower. I don't know why it trades 16 million shares a day on a day like today, but anyways, it's good to see that that continues to do what it's supposed to do, which is just deteriorate in value over time. Speaking of downtrends that I've been warning people to stay away from for years, WLT closed at another new low today, and you can see it's been stuck below this declining 50-day moving average all year. People are still getting excited about the bounces here. So people are still saying it's a good value and that sort of thing. It's worth, you know, I heard people talking about what are the Clippers worth? Are they worth $2 billion? Well, if a billionaire wants to pay $2 billion, that's what the market is saying it's worth. That's what it's worth. What is WLT worth? Right now it's worth $488. You can convince yourself by looking at the balance sheet that it's undervalued, but as long as there's still sellers in this stock and we're even below the declining 5-day moving average, it's guilty till proven innocent. It's not down too much. Compared to what? Compared to prior declines, compared to where it's been in the past. It's been deteriorating for years in here, and these types of turnarounds are really actually pretty rare. I think that people are looking for that to continue, you know, something like that reversal that we saw in 2009 to occur again, but there's zero price evidence. We're still below all the declining moving averages. It's guilty till proven innocent. Now, if we take a look at some ideas that might be setting up for next week, you know, you want to have a good list of potential longs and shorts. You look at a stock like ANSS, it's broken it's right on its longer term trend line. It's below the 10, 20, 30, 40 week moving average and at this prior level of support, but it looks like it still has the potential to continue lower. The most important thing, of course, is if you short it, where do you put your stock? Well, stop. If it got back above here, you would have no business being short anymore. You would have to take that small loss, but it's guilty till proven innocent while it's below a declining 5, 10, 20, 50, 100, 200-day moving average. So that's a good one to put on your radar for a potential short. ATVI, this stock kind of does, you know, these little stair steps higher as well, with prior resistance areas holding as support, and it's looking like it's building for the potential of something to get moving, maybe above 21 bucks a share. Worst case stop down at about 20 and a quarter. BLMN is in a downtrend. Longer term, you can see that this, you know, we had a beautiful stage 2 uptrend, stage 2 distribution, and we're in a stage 4 decline on the weekly time frame, and it's guilty till proven innocent. Perhaps this one can continue lower as well. Worst case stop in this one I think would be right up about 21.45. CCI, Crown Castle, you can see on the weekly chart, beautiful uptrend. It's been consolidating for about a year. It's broken a little resistance, and it did so over here. It pulled back and tested that resistance holding a support. And on an intermediate term time frame, it's getting where we have the 5-day moving average heading higher, so perhaps back above 77 bucks a share, with a risk maybe down just under 76. And of course, you want to, you know, peel some off as if and when it begins to rally, and raise your stop underneath higher lows. That's what we talk about in Alpha Trends every single day after the close with stock trade ideas, and follow up with them in chat. KOG, Kodiak Oil and Gas. This one's been in a phenomenal uptrend for the last several years, and you can see it's consolidating at that rising 50-day moving average. Maybe above these highs of 1286, it will continue to rally, and a stop near 1230. So I have your plan. Wait for, you know, anticipate what the potential action is. Wait for price confirmation before you actually participate, and then manage risk. That's the job of a trader. NTES is starting to look like maybe there's something going on here that it could be turning back higher. Now, if you look at the weekly chart, you might even say it's a head and shoulders top, and that's scary to short it. But I say that, you know, as long as it's remaining above 70 bucks a share, if we can get it back above some this little band of resistance in about the, you know, 71 $71.70 to $72 a share. If it can get back above that with a stop below 70 bucks a share, to me it looks like it's a good candidate to squeeze shorts and probably, perhaps head up towards $75 a share. Now, what I wanted to talk about was the direction of the 50-day moving average. A lot of momentum stocks have been hit over the last couple months, and people have been trying to search for the bottoms in those. Stocks like blocks. This stock has been hit super hard here. It was in a phenomenal uptrend last year. It got hit on a gap, and then another gap, and this is the breakaway gap, the running gap, and this could be the exhaustion gap. I'm certainly not suggesting you look for a bottom in it, but the point is, with the declining 50-day moving average, even here last week before today's gap lower, people were excited about it because it was rallying. I say be very wary of these rallies when you have a declining 50-day moving average. News and surprises tends to follow the direction of the trend. Data we saw fail. We saw this one get hit real hard from 100 down to 55. It rallied nicely, but these rallies will typically fail. And the first clue is basically getting under that 5-day moving average on an intermediate term time frame. Triple D, guilty till proven innocent, declining 50-day moving average. It started to rally. They did a secondary. Whatever the reason doesn't matter. News and surprises tend to follow the direction of the trend. It gapped lower, and here we are with this stock again. If they don't scare you out, they'll typically wear you out as the buyers become less enthusiastic and they don't buy into these little bounces anymore. The hot money leaves them for dead, and they need a time to heal. LGF, Lionsgate, had a great 2 weeks, it looked like. Then they can't, with the declining 50-day moving average, news came out. It got hit real hard today, down 11%. PCYC, the last rally up to its declining 50-day moving average, and it came down to new lows. If they don't scare you out, they'll typically wear you out. PFPT is starting to break down. I think this is probably a good candidate for a short. I'm not saying right here, right now, but it's below a declining 5-day moving average, and I would expect that's a good one to keep an eye on for potential short sales. That's what we'll be watching in Alpha Trends. QSII failed. People got super excited. It gapped up, and then it gapped this day. How would you feel if you were the person who bought up here? Just completely stupid when it closes down at 16. Maybe you bought more, and then it closes down another buck the next day. Stay away from these stocks. Specs, it's in a primary downtrend. I had some guys in Alpha Trends trade this super well, and they were smart enough to take profits in it, that they got involved as it was rallying. They got out before this gap lower, but a lot of people chase this stock. If you look at the 4-day volume weighted average price since that move began, the average price that people participated in the stock was $283, almost $1 higher than where it was on this massive volume. So there's a lot of bad feeling about that one. SPLK started to rally. We had a rally from 41 up to 50, but now we're back down to 41. Again, news and surprise tends to follow the direction of the trend. World Wrestling Federation, people got excited about it on this bounce. News came out, smash. Now, not all of them occur that way. Amgen, maybe it's going to decline, but I would certainly be very cautious if you're involved in Amgen, and let's say it breaks below 115 and starts making lower highs and lower lows below that 5-day moving average. Same would go through for Biogen IDIC. I wouldn't expect this to continue to rally. If it does, keep raising your stops. If not, it's not breaking down yet, but it has the potential, as does CAMP, CAMP. Who knows what these guys do? I certainly don't, and I really don't even care. It's a broken momentum name that has caught a pretty nice percentage bounce. If you're in it, start taking some profits if you got involved at a good price, because it's starting to show signs that back below maybe 1860. I think that this stock could get hit real hard once again, and it wouldn't surprise me at all to see it back down testing the lows. Google has been kind of immune so far to any real selling after a very nice rally. It broke this resistance at 540-ish. It had a real nice rally. I wouldn't be surprised to see it come down here in the next several weeks, down towards that 50-day moving average. And right now we bounced from the rising 5-day moving average, so perhaps this is the beginning of an intermediate term distribution, but it's clearly not time to sell it short yet. MDSO is another one. This one has been in a real downtrend, rallied, and now it's looking like it should be heading lower again. Netflix is a great example of a stock that's been immune to selling off. First over here we saw in earnings where it gapped up, it came down hard, and now this time it's rallying and it's holding on to those gains. So far, it doesn't mean it will. Now we can see we're riding this rising 5-day moving average, and it's innocent until proven guilty on the intermediate term time frame, but we have mixed messages on different time frames with that 50-day moving average still declining. So if you're involved in Netflix, especially if you're involved somewhere down in the mid to higher 300s, protect your gains. Not necessarily that you want to look for a short sale in it, but it's something to keep in mind. What's the direction of the 50-day moving average? News and surprises tends to follow the direction of the 50-day moving average like it did in OVTI. And I don't mean to focus on the negative so much, but what I'm trying to focus on here more is risk management, and don't become complacent. Even the stocks with with rising moving averages will decline, and advancing moving averages will decline, declining moving averages will advance. But what's most likely to occur? What's most likely to occur is one of the foundations of technical analysis, and that is that prices move in trends. A trend once established is more likely to continue than it is to reverse. That's what's going on in the S&P 500. That's what's going on in the NASDAQ. That's what's going on in gold and in each individual stock that you trade. If you're not comfortable or with this type of approach, or if you're doing something different, take a week trial to Alpha Trends and see how we do it with a consistent methodology. Thanks for tuning in.